Welcome to everybody to quarter three presentation in Protector. And my first foil today is a rather important one. It's a big sports event going on in Trondheim this weekend. So it's a national championship for veterans. And I am preparing for another gold medal. And it's 4 years since last time I played handball. And last time I was playing was in the same championship in Stavanger, and we played the final. And I said to my friends in this club called Fjellhammer that this year again I will participate together with you, and now we are favorites to win the championship. So lucky you, you will have me on your team this year. And I have prepared with 3 handball trainings in 4 years. So I feel well prepared for the tournament. So the reason why I'm saying this to you everybody is that we maybe have something called a culture in Protector, which also is linked to sports then. And this is what I do now and then. So read the press on Monday morning and check out whether we have another gold medal or not. Okay? But it will hurt, so I do not look forward to Monday morning. This foil, most of you know very well, it's the DNA of the company. There are 12 statements, and every morning when we have State of the Union, before meeting investors, when giving a quarter presentation to the market, we go through the DNA of the company. Today we have questioned our employees whether they do remember and whether they invest resources in order to try to educate themselves in order to understand. So it was full score this morning. We have had 2 sessions with employees, and both randomly picked could name all 12, and this time they were challenged to say them from the bottom up, not from the top down. And they managed to do that. When we meet you, we remind ourselves about the main targets for Protector. We have cost and quality leadership as drivers for profitable growth, which again will lead to top 3 position in any segment we enter. And the question is whether we are moving the right direction compared with the main targets of the company. And if you go to the highlight, you can easily see that we are growing with 16% in the commercial sector, which is the main area for future growth, 12.6 on a company level, because this quarter the level of change of ownership is higher than, for instance, in quarter 1. So seasonality-wise, this is normally a lower growth quarter, but the growing segment is growing 16, which is slightly below earlier quarters, but again on a good growth level. So we earn money and we are growing, but the big question today is related to the net combined ratio, sized 97.1. So this is a poor figure. I'll try to explain a bit more what is happening, what have we done, and what can we do in order to improve that important figure. But in the meantime, the annualized return on equity, not annualized return on equity, is 18, and the growth rate on a year-to-date level is 21%. So the growth story continues, in my opinion, and I will certainly also give a few comments on UK and the development in UK, which of course is important to Protector if you are looking 3 to 5 years ahead. So I'll comment more on the different segments and the different countries through the presentation. And feel free to ask questions during the presentation, that's okay. We don't need a microphone. I will then repeat the questions. And those of you who are out there on webcast, you have the opportunity to throw questions which will be answered at the end of the presentation. Okay, the first important element to communicate to you is that one troubled area the last 6, 12 or 18 months has been change of ownership. So we have spent a lot of resources also talking to you about the challenges we have had in this area. So it's good to say today that we are back on track and back in black. So the turnaround is what I would call nearly completed, and the team have decided to be best ever in Q4, and according to the team working in that area, I agree with the statement. I think it's a realistic situation to see that we during the next couple of months now will have established a platform on quality which is higher than ever in change of ownership. And I would expect that area to continue to be back in black. It has been some price increases delivered to the market also this autumn, which has been accepted by the market. So there are no challenges related to the kind of what I would call minor price increases. We haven't done anything strong in the area, but we have done what we feel is necessary. The turnaround is incomplete. We are back in black. We are possibly better than ever. And one of the two problem areas in Protector in the last couple of quarters, which we have shared with you, is back on track. That's good. Thumbs up. Change of ownership is okay. Some figures, of course, we can still improve, and we will continue to try to improve in that area. But a small volume increase due to market condition. Market is good in Norway. Real estate market is continuing to doing very well. And the figures are good, and I do not expect any problems with our results in Q4 or in 2017. A question?
Just could you tell us a little more about what you mean by next level and best ever? Is that a number of claims cases open, or which does it have anything to do with the profitability or claims levels or the number of cases?
So the most important element of best ever claims handling is related to the number of open claims. So what you have seen is that we have reduced from 2,100 open to 1,431 at the moment. So the important thing is to stabilize on such a low level, and possibly, we haven't really decided, go slightly further down. And then secondly, it is important in order to continue to improve quality when fighting the big claims. And they are very often going to court, and we are not up to our best standards. How many court decisions are in our favor? In Q3, that figure is 48. Our target is 60. And the draw target is 20, and the loss kind of target, or the loss accepted, is 20. So we are, as you can see, on 48, 22, 30. So the challenge is to move around 10 percentage points of that figure to the left. So that's an important element of best ever claims handling. The third element is to continue to involve our technical expertise early in a claims handling process. We have around 25 to 30 lawyers working full-time claims handling in that area, and we have 4 technical experts with a 20-25 years background from these kind of areas. And to involve these people earlier in a better way will prevent claims from growing. So best ever claims handling, Q4, and next level is to continue to build on the number of open claims, what do we do in court, and how do we improve the level of technical expertise used also in the smaller cases, not only in the bigger cases. Okay? Okay, then we are going to Denmark. What we see in Denmark is a combination of elements which is hitting Protector. First, as we discussed in last quarterly update and in the Capital Market Day, especially in Q2 presentation, we are working to establish sufficient control on the different affinity programs or client facilities where we have a number of problems. We haven't established sufficient control on these kind of programs historically, and we have a way to go in order to improve that situation. So that's one of the reasons why the result in Denmark in Q3 is very bad. The other reason is a bit outside having control. It is more about the kind of risks we are willing to take when we enter a new market. And I think it's fair to say that we have taken some risks on board to a too low price and we are losing some money at the moment. That risk is not only decided in Copenhagen, it is decided in a combination with the best people we have on board in Oslo. So that risk-taking kind of issue is a company issue, including myself, including the director, chief underwriter, property casualty in Norway. So we have had a lack of control on some affinity programs. We have, as always, been willing to take risk and lost money on that risk-taking. And in this quarter, slightly, a little bit bad luck with two big fires down there in Denmark. But the last element is not important because that will balance out during quarters and years. So it's not important. But okay, two fires, one in Esbjerg, the city on the west coast, and one in a big shop in Denmark, which is part of a program, which is, in my opinion, not bad underwriting. It's insurance. This is who we are here. So the important thing, are we capable of getting back to control on the affinity programs? In my opinion, yes, we are, but it will take time. So we have cleaned up a lot around Christmas, but there will still be elements to work on in 2017 in the affinity area. What about the risk-taking? I think it's more dangerous for Protector now to not take risk, because we have demonstrated during the last 10 years that we are willing to take risk in new areas. Enter municipality segment, supposed to be bad business. Enter group life, supposed to be unprofitable. Enter disability insurance in Norway, difficult to enter. Taking 50% market share bus market, Sweden, considered to be difficult. Enter Sweden, enter Denmark, enter UK. So if you have an ambition to grow 20% a year or something like that, you have to take more risk on board. And I think we have demonstrated during the last 10 years that we are more successful than unsuccessful in taking new risks on board. However, in Denmark, at the moment, some risks are taken on board to a too low price. We can see it. We have to fix it. It's a part of the challenge you have when growing 20% a year. It's not an issue on a company level. It's not dangerous. It's not very difficult, but you can't win them all. That's not possible. So my expectation is that you will probably see negative volume growth both in Q4 and in Q1 next year. There are big clients where we have discussions on price at the moment, and we will come through with some of them, but we have already lost some of them. That's okay. That will improve profitability. So there is a kind of a uppricing and cleaning situation in Denmark going on. It will get worse before it gets better. Both on combined ratio could get worse. Okay, I'm not quite sure that it can go worse than 139 on claims ratio, but it's possible. And it is included in the guiding we have given this morning. With a combined ratio, size 95, in that figure, it's included trouble in Denmark in quarter 4. A lot of trouble in Denmark in quarter 4. We don't know it will appear. We don't know for a fact, but we should be prepared for more claims on some of these affinity programs, which will not leave before January 1st, 27. So in my opinion, we are gradually going towards a situation with either a lower volume level or a lower volume growth level in Denmark, and we will turning back to black. And my expectation is that that will happen in 2017, but there is a risk related to it. It's a risk related to it. And if there are a lot of people giving me a lot of advice that you shouldn't enter Denmark, and Denmark is difficult, and workman's comp is even more difficult. Today I will say, yes, you are right. But I could also say, let's wait and see. Because when we entered commercial Denmark in Norway, it took us 6 years to earn money. 6 years. 4, 5, 6, 7, 8. Accumulated those 5 years, not profitable. Okay? Denmark, 12, 13, 14, 15, 16. We earn money in 15, but we are in red in 16. So the 6th year in Denmark is next year. So I will say it's too early to say whether we will succeed in Denmark. In my opinion, we will. We have not at all given up. We have on a company level, small setback in Denmark at the moment. We have good enough people on board in Copenhagen. So when we meet on Tuesday morning in the office, I am absolutely sure that there is a lot of energy in that room in order to get back like we have delivered in change of ownership area. So the kind of small turnaround situation in Denmark has started, will be delivered. I'm not worried. This is a part of a risk for a fast-growing company. And I will also come back to give you a bit more information about how do we look upon the expected situation in 2017 when talking about the combined ratio level. So is it questions to Denmark?
Just on the volume level there, with a negative outlook for growth in Q1 17, will you also be negative for the full year?
It's too early to say. There are, so the question is, with a negative outlook for Denmark in Q1 17, will you also have a negative view on the full year? And my comment to that is that it's a bit early to say. There is one very, very big client situation which is out in the market now, which is ours, which is a lot bigger than 100 million Danish kroner in annual premium. If that leaves, the kind of hole we have is bigger. If it does not leave, and that is not decided yet. So it's a bit early to say. We could have a kind of zero growth situation for the full year, or even a negative growth situation for Denmark for the full year. That's possible, but it's too early to say. So it's difficult to say. So if this very big situation is kind of will continue with Protector on a higher price level, then the situation will be a lot better. Then you could even see positive growth in Q1 17. But my expectation is that that big situation will disappear. We will not close that deal because we will not compromise on price on that deal. And if the other party don't compromise either, then we are out, which is okay. So I would prefer to continue with significant price increases. If not, walk away. As always, volume is of no interest to Protector. Profitable volume is what we are targeting. So another question related to Denmark?
It took you 6 years to be profitable in Norway, you said.
Yes.
Wouldn't it be fair to expect that there would be a quicker way to profitability in Denmark? With the experience you have you misjudged the market, or?
So the question is whether shouldn't we really expect Denmark to be profitable earlier, since when you enter Denmark you have more experience, a better position. Haven't you researched the market? Yes, we researched the Norwegian market when we started that market as well. So of course we have researched the Danish market as well. But I think your question or your comment actually is relevant. Yes, it would be reasonable to think that you should earn money in Denmark before Norway, commercial. I agree with you in that area. So you could say we are on schedule in Denmark, but I don't say that. I haven't said that, okay? But I'm saying, if you compare, it takes time, but we, in my opinion, we have critical mass this year in Denmark, and we should have been in black this year. Yes, so it's a fair comment, fair question. I agree with you. So you could argue we are slightly behind plan in Denmark, but the accumulated situation in Denmark, the first 5 years, it's not that bad, not at all. Not that bad. Rather small losses the first 5 years. Rather small losses. I haven't really calculated. A couple of handfuls of millions or something like that, a bit more than that. But I haven't really calculated it. So insignificant in that area. My expectation for UK is that it will not take 6 years before we are profitable in UK. Not at all. Because you will reach critical mass very early in UK. Come back to UK afterwards. More questions about Denmark?
Can you say a little bit about the competitor response and the situation in Denmark now? Are they in growth mode, or are they also increasing prices, and also the extent of management changes being implemented?
So the question is how competitors are acting when it comes to prices in Denmark. It's a very unclear situation in Denmark. There is not kind of one situation. It's not like increasing prices or more aggressive. So there is a combination of answers in different segments. I would say that the over part of the Danish market is rather disciplined. So it's not an undisciplined market. But the brokers are fighting the end clients' position rather hard. And it's a challenge, but that's normal. That's like always. So basically, I would say that our competitors in Denmark is rather disciplined. And was it a second question as well?
Management changes?
Internally in Protector. That's on the second level. So the chief executive, he is a good man, will have all support from Oslo, is the man for the future, will not be changed, but his management team has been changed. So there are 3 new people in that team and 2 out. That is, of course, not kind of a sudden situation arriving in 3 months. That has been a gradual development in Protector Denmark in order to learn to understand the different qualities of the different people in your team. And like in Norway, like in Sweden, then in Denmark, there are some changes on key personnel level in the first years. It's normal. It has always been like that. And I would expect the same thing to happen in UK. But still we have a kind of a very solid and good team on board in Denmark. And I am not worried about it. But some changes has been done. Another question?
When it comes to this workers' compensation, is it so that you will be much more cautious when you go to pricing, or is it that you will be sort of aggressive on pricing to still win the workers' compensation business going forward?
Okay, so the question is whether we will be more or less aggressive when pricing workers' comp in future. And it's actually a very, very difficult question to answer, because it will still take a number of years before we really know the profitability of the product. Like it looks today, we have taken some losses, reserve losses, as you can see in the figures here. So we anticipate this to be a bit poorer than when underwriting these kind of clients 2-3 years ago. But it's not very easy to know the exact answer, and the exact answer will not be known before, let's say, 10 years from now. So it will still take many, many years before we know the actual answer. So we will be more cautious. We will step slightly back on the aggressiveness of underwriting and pricing workmen's comp in Denmark, but not very much. We should remember that workmen's comp in Denmark drives the balance sheet upwards and is delivering something else than a combined ratio, which means return on investment. So the number of years you have these kind of money in your balance sheet before paying them out is even longer than in Norway. So the investment income of the product in future is very high, actually. So the one element is to consider the claims ratio and the combined ratio. The other element is how do you invest this kind of money and what do you get back from it. And there is obviously also mega trends going out there in the market. So the question is whether actuarial models today can predict future. And I think they cannot. Because if you are looking into the claim statistics the last 20 years in Denmark, you can see a reduction of number of workmen's comp claims, size 20% in that period of time. These kind of developments is not fully taken into consideration by actuaries when consider future claims cost in workmen's comp. And we have documented that the average size of claim cost workmen's comp in Norway has gone down the last 10, 15, 20 years. That could be, those kind of figures are available in Norway. They are not available in Denmark. You can't find these kind of figures anyway. But it is realistic to believe that the same thing will happen in Denmark, like in Norway, that the average size of the claim will go down because industry is turning from blue to light blue or from light blue to white. Engineers today are not working on the floor, they are behind a computer. So industry trends supports the idea that you will have fewer serious claims out there in the market. And health and security measures are continuously being improved. So you should anticipate that the average size of the claim in future will be lower than in history. And the question is whether models have picked it up, and the answer is probably not totally. So the question is very difficult to answer. We will be less aggressive than earlier, but we will not at all walk away from the area. Another question?
The loss you took in the quarter, is that bringing you back down to 100% level, or is it so that you could say that combined ratio is even below than if you think about the actual levels you've taken as a loss?
So the question is, how do we consider the kind of reserve losses we have taken now? Is it sufficient or not? That's kind of rather difficult. So what we have done is to pick up the claims level in the years 2013 and 2014 to a high level, and we have also increased the expected loss ratio in 2016 somehow. So both on earlier years and slightly on the last year as well. Whether it is too much or too little, it's difficult to say. If we do have a year-to-date combined ratio today, size 93, and if we guide on 95 at the end of the year, you should expect that it might appear some kind of things in Denmark in Q4, but we don't know at the moment. We don't know. But again, this is on a company level. It's not a big issue. These are not big figures. And in a while, I will come back to how to consider the underlying combined ratio and the claims level on a company level. But yes, there has been some reserve losses in Denmark. Okay? So I got a kind of a tip from the board yesterday. Start with change of ownership in Denmark. Then, so the order we have today is slightly different because normally we start with Norway and then change of ownership and then Sweden and then Denmark. So kind of in a chronology, like the years we started the different business areas. But that tip, Mr. Chairman, is okay. Jostein is here today. So thanks a lot for the kind of feedback. We started out with the problems and then be prepared for the good news now. Okay? When it comes to the volume, I think we are growing. It's 16 on the commercial sector, and Denmark is negative and Sweden very well. And you have heard the story, and I continue. We have talked about the claims, the poor claims quarter. It's a poor claims quarter, that's for sure. Not talking too much about cost in this quarterly presentation. I said to you after quarter 2, where you saw 5 point something, the underlying reality is higher. Don't look at it. That is technicalities. Quarter 3 and 4 will be higher. But the important thing is that we will continue to go down from 7.5, and we will. We will not end up at 6.7. Again, technicalities will lead quarter 4 to be on a high level, but we will end up with a world-leading cost ratio at the end of the year, lower than 7.5, despite the fact that we are investing a lot of resources in UK and in Finland, especially in UK, of course. And here is a rather important foil, because to look into the insurance accountings, there is a difference on what we could call what we call the reporting year and the actual underwriting year. Reserves will change. That's normal. So the different underwriting years will either improve or get worse. In the situation we have seen in Protector this year, we have significant reserve losses in change of ownership and some reserve losses in Denmark. We have talked a lot about these kind of reserve losses. So what kind of years do they belong to? They belong to especially 2014, but slightly also to 15 and a little bit also out here in the earlier years. If we had taken out more years, you would have seen that some of these figures will have also been linked to, but with smaller amounts, to previous years. So the important thing now is that if you're looking to an underwriting year, the real risk year, how is the profitability for the business we are taking on board in 2016? Today, that figure is 88. It's not like reported 93, because 5 percentage points belongs to history. If you constantly have that problem, then you have a problem. Okay? Then you are wrongly reserved. But the history has showed that Protector is not historically wrongly reserved. We are not. That is documented. It's not a statement. That's documented. And when I'm saying that the underlying reality is not really 88, it's 90. So I'm not saying 88, I could have, but it's not correct, it's 90. The reason why is because I do expect a poor quarter 4. And when entering, like I said in the Capital Market Day, when entering 2017, you might see a situation where we will expect to go north of 90 in the guiding we give in February. But let's wait to February. But you shouldn't be surprised if you see 92 or something else than 90. Because the underlying reality is 90, and the competition is not very strong, but it's there. And we will be extremely satisfied with a combined ratio in future size 92 or even 94 if the growth rate is good, because that creates shareholder value. So if you have a growth rate 15 or 20 like we have today, and still have a good combined ratio, the return on equity will be extremely strong. So this is a kind of normal way of evaluating what is happening with an insurance company over time. And the underlying reality is not 93 moving upwards to 95, moving upwards to something even bigger next year. The underlying reality is around 90. And as we agree, the journalist sitting behind here, you should get suspicious when we talk about the underlying reality. But you have heard me before saying that the underlying reality is worse than what you see. So hopefully I can be trusted when I say sometimes underlying reality is worse than figures tell, sometimes it's better. On this figure, underlying reality is better than actually a reported figure. So if share price go down 5 today, it's a good timing to at least I told my employees this morning, go buy shares today because the share price will drop with 5 kroner. I said at 7:45 this morning, and I guess we started on 5. There's a question behind here.
Underlying reality, if you discounted your provisions like the Danish insurers do, how many percentage points lower would the
Okay.
underlying
Okay.
then like the economic reality?
Okay. So the question is whether we account figures here the way the Danish do, whether we discount future financial income in long-tail products like workman's comp. And the answer is no, we do not. So the combined ratio in Denmark would have looked better if we had used Danish accounting rules. But we are located in Norway, and we use Norwegian the Norwegian-based way of delivering reporting. So the key figure combined ratio in Denmark would have been better based on accounting rules in Denmark. How much? We haven't really been through it, and I'll come back to that after Q4. So we will obviously, when workman's comp, part of the total business in Protector, is growing, then this question starts to be relevant and important. At the moment, it is relevant, but not really important. So no big changes in the combined ratio, but some changes. So on a Protector level, this is of little interest at the moment. From a Denmark point of view, it is about to grow to be of significant interest for the smallest country we have now in our portfolio. So it's a relevant question, it's a good question, and we will come back to it, and we will obviously in 2017 guide you on the 2 different figures every quarter. Okay, Norway, profitable growth is continuing. So despite the fact that we have a high level of large property claims, you can see here that historically we have never ever had a year with such a high property claims ratio. That is not a problem. Reinsurance contracts is picking it up. It is a product which will have a certain volatility, and it will come back down again. So it's not important from a reporting point of view, but it does hurt the gross combined ratio in Norway and Protector when the figure is as high as 129. But this normalized, this is 72, and it will not continue on that level. So the important element with Norway Commercial is that we are doing very well, we are growing, it's profitable, and the hunting season has started very well. So January 1st renewal will be very strong. The growth level in Norway will be higher than what you have seen the last 2-3 years in Q1, despite the fact that rates are going down. So it looks very good at the moment in Norway. That was good news, wasn't it? No, any questions about the good news? Okay, let's continue then. Sweden is doing even better, and like saying now and then, that a bit of bad luck has happened, a bit of good luck. So the low level of property claims in Sweden will not continue. Okay? So we are a lot lower than the normalized level, which is, I guess, closer to 75 in Sweden, possibly 77 or something like that. So we are doing a lot better than normal in property areas in Sweden, but the big element and the important element in Sweden is the motor area, and that big area is doing very well. So we are growing, it's profitable, we have a bit of good luck. 1.5 months ago, the team was nominated to have cultural lead in Protector, so we feel strong and confident in Sweden at the moment. And they have also managed to establish Protector in Finland. So no really issues in Sweden, and the kind of next level discussions in Sweden is about increased efficiency in claims handling and new strategic initiatives, for instance, health insurance in Sweden. So we are moving in order to broaden out the segments we are attacking in the Swedish market. If you go to Finland, it's more like it's moving and it's doing okay. The team is on board. Some clients is arriving, and it's a part of our Nordic offering. Not very important. UK though is of course very interesting, and what we have now is a situation where we have what I will call the first and second breakthrough in commercial sector. The first commercial segment client is on board. Actually, it should have been an S, clients on board, because it's not one, a three. So today we have 3 clients in commercial sector and 8 in public sector, 11. And it's moving rather rapidly. The first commercial client is important, but this kind of exclusive panel of insurers is a kind of setup you don't see in the Nordic area. So what is happening is that the big 5 national brokers in UK, they invite a limited number of insurance companies to compete on their main business areas. And they basically exclude the other ones. So either you are part or you are totally out. You have the leftovers. And nobody likes the leftovers in that area. So the first panel we have tried to qualify for, we have been qualified for that panel. And that is not obvious that we will have qualified for that kind of situation. We have 15 people in Manchester. We are qualifying to be considered to be an insurance company together with Allianz, AIG, RSA, QBE, Aviva, and other big UK and international players. But we are the challenger, we are Protector, we are market leader public sector in the Nordic, we are number 3 in commercial segment Nordic area, broker-based business, so why wouldn't we, and why shouldn't we get that kind of status? So we have been nominated to be a part of that panel, and there is 1-2 other type of panels coming out the next 18 months, and they are important. We don't have to kind of win them all, that's not needed, but if we win none of them, it will delay our growth situation in commercial sector in UK with a lot. So it's important. The first is out there. We have been successfully nominated, and we have got support from our friends in the Nordic area. So when we ask our friends in the Nordic area to give a testimonial on our qualities towards their colleagues in the UK, they do, and it helps. So it's important. What we are doing in the public sector at the moment is quoting more business in UK than in Norway. We are quoting more business in UK than in Sweden. We are quoting more business in public sector in UK than in Denmark. Not accumulated, but the biggest quotation area in Protector in public sector at the moment is UK. It is moving rapidly. And April the 1st renewal date next year will be a big event and possibly bigger than previously expected in that area. Of course, it's too early to say what will happen, what kind of volume we'll get on board, and we will give no such kind of firm statement at all today. So let's come back in January and give you an update on the view we have on the different markets for 2017, but the speed is picking up and it's moving fast. And we have already delivered 2 very big quotations related to April the 1st renewal date. Some of the big London boroughs with more volume than what you see in any city in the Nordic area. Any city in the Nordic area. So it's moving, it's interesting. And a very important part of what we're doing at the moment is to bring our people in UK to align with the kind of culture we have. And this is the place we have up in Hafjell, where we have had the 15 employees from Manchester going to Norway in beautiful weather, do a hike in the mountains, and talking about targets 2017 and cultural elements in that area. So all people smiling when leaving that stay, arrived late Thursday afternoon and went back home to Manchester Sunday evening then. So it's interesting, and I guess that we might invite you to Manchester in 2017, but I think that will be kind of at the end of the year then. I think that's important. So any questions about UK? Yes?
Any change in your view of the risk in the UK market?
Not really. So we have the same kind of view on the risk in, so the question is change of view in risk? Not really. So far we have seen what we could consider rather high rates, high deductibles, and not a very good quality level delivered from our competitors in public sector. So in public sector, the competitive situation is like what we saw in Sweden and Denmark, possibly slightly easier to enter UK. Possibly slightly easier. Because the market leader cities have a direct distribution strategy towards market and fight brokers, which is in our favor. In commercial sector, it's too early to say. I can't say. It's too fragmented. It's too early. Another question?
I'm not sure if it's related to UK or not, but I will try either way. The costs have been quite much up quarter on quarter. Is that related to costs you're taking on in UK? I think you mentioned that somewhere in the report. And if so, could you say how much all the additional cost is from UK and how much is from Scandinavia?
So I think that there are kind of quarterly variations in the cost level of Protector. The important thing today is that we have accumulated 6.7, and we have kind of different elements which is changing a little bit from quarter to quarter. No payment in Norway in June because salary is divided on 11, not on 12. So it's a very low level quarter 2 cost in quarter 2. Has nothing to do with UK, not at all. How does the share price of Protector develop? Because long-term bonus plan is linked to it. That creates kind of volatility. And then you have commission cost level, which varies with gross written premium in Sweden and UK. So there are different technical issues that will create some kind of a cost volatility between quarters. And then on top of that kind of volatility, you have 20 people working without volume, 15 in the UK, and of course some costs related to UK outside people cost, consultancy, formal cost, establishment, fees to pay and things like that, and to a certain extent also in Denmark, where we have, Finland, in that area. So we don't have a kind of specified view on it, but of course the cost level would have been lower than 6.7 if we haven't had cost in UK, but I don't have an exact figure at the moment. But we can manage to invest in UK and Finland and at the same time lower the cost ratio of the company. But of course the underlying reality is better than what you see because there will be volume out from UK. And the cost level in UK is today 100, and will of course go extremely rapidly down to 10 and to 8, and to a lower level than that. Another question?
Just jumping back to Norway, the 127 you said on the claims ratio. Norway was gross. What was it after the reinsurance business?
Mm. I'm not quite sure. So the question is what the loss ratio Norway 127 property for own account. I guess it should be basically in line with the gross, basically in line, but the net premium written is 20% of the totality, so the relative influence on that high property claims ratio net is extremely limited. So you don't see it in the net figures, but it should be in line. So over a period of time, it will be in line. We have seen it's in line, but it can vary a little bit from quarter to quarter. Okay, so let's continue then from UK, the figures. I think it's okay to see that it's the best 9 months ever we have seen in Protector. So the profitability here, 470, is the best 9 months delivered ever, and after tax it's even better, I guess, because since a part of the profit is deriving from return on equities, it's free of tax in Norway, so you can also see a tax level on a very low level, both in this quarter and year to date. So here's what you have seen, and of course a very poor combined ratio, very poor, very strong profitability, and whether the glass is half full or half empty, it's up to you to decide. And if I look into the underlying reality on the combined ratio, my glass is more than half full. And since I'm going to Trondheim soon, I look forward to drink it as well. Because, yeah, okay, we don't talk more about that. Okay, any more questions to the figures? So the very important thing, of course, is that we have another core business, which is investments. So when some competitors are saying that investments is not really core, we say it's core. And what we are showing here is that 60% of historical profitability is linked to return on investments. I don't say that that will continue in future. It may be slightly lower, but it is a very important part of the profitability of an insurance company over a long period of time. Of course, with some kind of volatility. And some of you who are looking deeper into the flow of the company and the growing flow and how the balance sheet develops, you can see that this is a very interesting situation. So if we can continue to grow 15% 8% a year, less or more, but at least double digit. The official statement in 15, the last 8-9 years is 20. The balance sheet will continue to grow. The return on investment will be a very important part of the profitability of the company. And if we continue to deliver good return on investments, we will end up with a return on equity on a very high level. So we are extremely satisfied with the fact that we have 4.9% return on investment year to date. Of course, we should expect volatility in that area, but our target is to be champion. And if you are looking at some competitors with a quarter of the return on investment we have, they state that they are satisfied. They have a so-called risk-free portfolio, which we haven't seen. And our attitude towards investments is different from many other insurance companies in the Norway area. Investments is core, it's important, it's running well, it will be volatile, of course, and so far the team, Dag Marius, Katrine, and your team, you continue to deliver. And this quarter, it is fixed income side who are kicking back after a poor quarter two. And we have also, as you who follow us closely would know, we have started quarter four very good on the investment side as well. So investments is important, it's core business. It's 60% of the profitability, historical to date, and are doing very well in that area. Yes, a question?
How much of the equity return year to date is down to Bank Norwegian?
Say again?
How much of the equity return year to date is down?
Okay, so how much equity return is related to the single equity investment called Bank Norwegian? And the answer is more than everything. So more than the full 9% is related to one single stock. But the important thing, which we went through in the Capital Market Day, is how does underlying reality develop in the kind of equities we invest in? Do they continue to deliver profitable growth? The kind of 15 shares we have invested in. And after 43 presentations, that hasn't been closed, as you know, we are in the middle of the season. Their response back is that the underlying reality on these kind of companies we have invested in is very good. Are they growing? Yes, they are. Are earnings per share going up? Yes, it does. Do we think that that will influence stock price in future? Yes, we do. Yes, in this quarter, by accident, the profitability on the equities is linked to one stock only, but in the longer run, it's not. And in the longer future, it will not. So this will not grow mathematically correct, as we all know. So the question is, how will future be? We think the future will be okay, and that's the reason why we have invested 20% or slightly more of our money in equities. Okay. Shareholders, no issues, guiding changed, summary. Year-to-date growth, close to 22, and best 9 months profit ever. Norway is doing well. Change of ownership back in black, back on track. Storm in Denmark, Sweden extremely good. Investments very, very good. UK looks promising, slightly ahead of plan. And we look forward to billion number 4 that may appear in 2017. So we are moving faster and faster. And then we have some questions, I guess. Yes, Thomas, when reading up some kind of questions here.
Just on the very short horizon here on the guiding, you say 95% combined ratio on the year. So does that mean you approximately targeting 100 in Q4? Or?
Yes. Yes. Or slightly higher than 100, as you already have calculated. But give or take 100, yes.
And then the next question is,
will that continue into Q1, so we sort of get another couple of week watch?
So the first question was, with guiding on 95, do you expect 100 in quarter 4? And the answer was yes. And the second question was, do you expect that to continue in quarter 1, 17? The answer is no. My expectation is that we will be back on track, possibly slightly north of 90. Come back to that in February. Could you read it? It's a small text, you know, Andreas.
First question, we can...
Any other questions from the audience here? Okay, so then just talk to me, Andreas, and then I could repeat the questions, you know.
What management changes have been implemented in Denmark?
What kind of management changes has been implemented in Denmark? I have commented on that earlier today already, so that's done.
That's done. Why are Protector not paying semi-annual dividends? I assume it would be more easy for liquidity and capital ratio management.
I think it's fair to say that so far we would like to have a full year before deciding on dividend here. We could still see kind of volatility on the investment side in Protector, of course. We wouldn't be there every quarter or every second half year on the dividend. So dividend policy is once a year. Anything else hasn't been discussed the last years in the board.
Third and last question, can you go more into underlying combined ratio trend is moving upwards? At the Capital Markets Day, you targeted 90% in Scandinavia and lower in UK.
And I guess I have commented on that already. So we have an underlying combined ratio sized 88 today, moving towards 90 with an expected poor quarter 4. And what I have said on the Capital Market Day is that we have 90 at the moment in Scandinavia, and we expect lower in UK. But at the same time, I also said that there is a rate pressure, there is a competition, and we have a risk appetite in order to grow rather fast, so that the risk is on the upside of 90. I'm rather clear that I said that in the Capital Market Day. So I think what we are saying today is basically in line with what we said on the Capital Market Day as well. It's difficult to discuss with a person on the other side, of course. But I hope you can accept that answer. If not, feel free to call me.
Perfect. We received one other question here from Petter Gustafsson in Prospect. He says, why doesn't Protector buy back shares if it's such a good investment?
Because the board has decided to pay dividend and not to buy back shares, and because we need a strong balance sheet in order to prepare for growth in UK. So there is a risk that we will grow more than what we have communicated to the market. Then we need not only a strong balance sheet, but a very strong balance sheet. And as I didn't comment on in the presentation, but that you saw, is that based on the standard formula, we have a stronger balance sheet than Gjensidige and Tryg. The solvency capital ratio in Protector, based on the standard formula, is higher than Gjensidige and it's higher than Tryg on a company level, and we need that balance sheet in order to prepare for growth in UK. Any more? Yes, another question here.
Yes, could you please just elaborate a little bit more on what has triggered these higher claims in Denmark? I mean, is it a higher amount of claims, or are the average claim size higher, or what's driving this?
So what has triggered the high claims ratio in Denmark? It's the average size of the claim or the frequency. It's both. So but it's not really kind of the right question, because my comment earlier is a bit better. That it's lack of control on different programs, and then a risk-taking ending up in a too low price. So nothing really wrong with the frequency development or the average claim size here. So it's either risk-taking, meaning too low price for a certain risk, or it is a lack of control on a totality on a program. So it's not really the average claim or the number of claims moving one way or another. That is more a kind of relevant question related to, for instance, consumer sector development, whether frequency or average claim is going up or down in that area. So the challenges we have is designed differently then. Yes?
You say it's lack of control of pricing in this product, and your competitors have been saying that you're pricing wrongly, of course, because you're entering the market, etc. But haven't you really done your homework on what you have done on pricing in this area, or are you just taking a risk, as you said, being more aggressive on the market and then as a building risk, willing us to do that risk?
So the question is whether we are, competitors have said that we are more aggressive in workmen's comp pricing in Denmark than what is healthy. And haven't you really prepared, and don't you really understand what you're doing? Is the kind question you have here. Slightly changed from my side, possibly. I said that.
It was about the risk. You said you were willing to take higher risks.
Yeah, we are willing to take high risk. It is a very difficult product to price. And we have been open about the fact that it is a very difficult product to price. We lowered the workmen's comp prices in 2007 in Norway. Lower than everybody else. Okay? What happened? It's very profitable today. It's very profitable today. What will happen in Denmark in future? I can't say. I don't know. But it might end up better than what we think. It might end up worse. So yes, we understand that we are taking a risk. And it's not like the competitors saying that we always are pricing lower. We have left some kind of big workmen's comp deals to some other ones called Codan. Have you heard about them? Or Tryg. Have you heard about them? Or Alminnelig Brand. Have you heard about them? So those competitors claiming that we are not pricing seriously. We have heard it before in Norway. We have heard it before in Sweden. We can listen to it now in Denmark. Sometimes they are right. Normally they are wrong. So yes, we take risk. It's difficult. Let's have fun. Continue in Denmark and see what's happening in it. It's a difficult area. It is. Okay. Thanks a lot for your patience. We are a bit over time. I apologize for that. Have a good day.